Morning team. So I just want to record a little video for you with a topic that I've been working on recently in my own trading, because it's something I've fallen foul to quite a lot, and that is a supply or demand zone bias. So quite easy to kind of see these supply and demand zones and just want to trade every single one. And the problem that we often have as traders is that they will often all cause some sort of reaction, whether it's accumulation, a distribution, or reaccumulation or redistribution. Okay, so what we need to make sure is that we are picking the highest quality zones for our trades, and there's a quick little hack that I can give you for this. Okay, so just analyzing CAD JPY. So we're clearly in a downtrend here, all the way down until here. Okay, and then what we've had recently is a push up, and this is on the hourly time frame. I'm doing it on the 30-minute chart, but it is the hourly time frame. Okay, and we're up to here now. Okay, I'm just going to mark this as blue. Now, because of this breaker structure, any supply zones that aren't at the extremes of the range, i.e. from here to here, okay, any supply zones that aren't at the extremes of the range, let's just get rid of that for context, okay, any supply zones that aren't in premium, okay, we're not going to consider. And the reason for that is if they're in the middle, if they're in that equilibrium area, they are just going to cause you problems. And if they're in the demand zone, if they're in discount, then ultimately we want to be buying from them and not selling from them. So here's quite a common trade that I used to take. I'll just get rid of these lines for now. Okay, this zone here, push up, push down, quite a nice supply zone. So what I would have usually done previously is zoomed in something like the 5-minute chart, see this kind of impulsive push down here and a move down here, and I would probably got in somewhere around about here like this. And look, in the grand scheme of things, you're probably, you're getting 2R out of it. It's not the end of the world. However, the likelihood of this being a bigger push down is very, very low, because what we're all chasing is obviously this push down here. The likelihood of that happening is very, very low. So what do we do? How do we trade it? Firstly, my bias is buy. So if I want to sell this, I want the cleanest setup possible. So I want to see something like this. Now, I'm not saying that this can't happen, but right now, this is not tradable. Okay, if anything, this looks like a reaccumulation. We've had this push up here, we've had a high, and then all we've had so far is tests. Okay, we had a push down, admittedly, breaker structure, and we've had a test. But there's no indication that the buyers are done yet. And this to me looks very much like the buyers are in control. Look at how slow these sell candles were and how fast these buy candles were. So if we're going to sell this, we want an exchange of hands, a classic kind of Wyckoff distribution sort of pattern where we see highs being raided, pushes down, and then ultimately this. So if you're going to trade this to a sell, I'm not saying it can't happen, but we want a really, really clean pattern. The safest thing ultimately to do is to try and look for buys. Okay, so what I would be doing instead of focusing on sells is probably picking other pairs to trade from that are in better positions. But if we do get down to here, down to this zone here, from here, however we do it, that is where I'll be looking for a buy from, because that now is a high probability trade. And you could even just take a trade, even if you didn't want to wait for confirmation, a risk entry here wouldn't be a bad choice, and that would give you a pretty decent trade. So it's worth just factoring these things into your trading. Okay, this is the range. You want to be buying from here, you want to be selling from there, and this part in the middle you want to try and steer clear from if you can, because more often than not you're going to get slapped. And if you had taken, for example, this supply zone here, let's have a quick look what would have happened. Okay, let's say you're taking this supply zone there. Look, there's no entry. Okay, and in fact the only entry that you've got is tagged into that supply zone. We've had a really, really good push down. You might have got this, but you wouldn't have even made first target. If your first target is that low, you wouldn't have even made first target. So this is what will happen more often than not, is in these kind of intermediate supply zones that are in the middle of a range, after market structure is broken, don't be constantly trying to sell and catch the reversal, because 9 times out of 10 you are going to be caught out. And what is a better trade is to wait for a buy to position itself. And look at this, range, got a push up, push down, market's cleared, push up. Look at this zone here. This has cleared out all these liquidity points. This zone here is prime. I'll be setting an alert there. In fact, I'll do it now. And when price re-enters into this zone, that is where we're buying from. For the time being, I'm not looking at sells until I get something really, really clean, or we get back up to here. So we go through another example of what we were talking about earlier, just to kind of help you understand what we're looking for here. And I'm going to give you a bit of a hack to prevent us from falling into these traps. So again, very similar scenario. We've got downtrend, very clearly in a downtrend here. Big moves. We've got lots of supply being created on the way down. And these are zones that you can use on the way down. So this zone here, the reason why I haven't highlighted it is because it has been used up. Okay, so that's zone that you can use. So you can see a lot of the time we don't get back into these supply zones. A lot of the time they are left untested, and so technically they are all valid. Okay, all of these zones, they are valid. You could use them to sell from, but the point is that the probability of these sells holding is low. And what we often do as traders is that we'll catch one that will work and we'll believe that it's going to work every single time. And very often that's not the case. So we're in a downtrend clearly, okay, until we push up here. Very similar to the CAD. I mean, it's another yen pair, so it is very similar, okay. We push up, okay, into here. And we swept that high there. So we are now in an uptrend. Okay, the bias has changed. We are now looking for buys rather than sells. And what a lot of us do is when we have these pushes up, we're like, right, okay, we're going to get into this supply, we're getting into this supply. And more often than not, I've marked out a trade for you here that would have been perfectly valid. Okay, more often than not, you're getting swept out. So this is actually quite a nice setup. We've got a clear exchange, buyers into sellers. I'll draw it on for you. So push up, push down, big test, push down. Okay, starting to show weakness, and then impulsive move down. And then this entry is, a textbook entry. I'll be looking for that all day long. But the key is that you have to look at these entries in good areas, and this is not a good area. The reason why is our bias has changed. We're now looking for buys, and therefore these supply zones, the effectiveness of these supply zones has changed. Okay, so there's a good way of doing this. Okay, we spoke about the range earlier and making sure that we're staying in the right range and staying in premium discount. This is a bit of a hack that I've learned. It's really, really simple to make sure. So the range you can clearly see is from premium here to discount here. So happy to look for buys anywhere here, happy to look for sells anywhere here. All of these zones in the middle, okay, what we do is set up a template and we call it a weak template, okay, and you change the color. Generally, most of us deal with visual aids better than just understanding. So seeing these zones marked in blue will give you a clear indication that you shouldn't be looking for strong sells, or if you are looking for a sell, like I said, that sell earlier was perfectly valid. It's got to be really clear than that. I took a loss on that one, okay, but that was a really clear setup. I'm happy with that. And actually, if I'd just taken the buy, we would have been in a much better position. Look, taking a buy from that demand zone, and look at that move, brilliant. But there was no clear indication it was going to go up from there. Your demand zone down here wasn't really tested. It was, but not really. So it was a shit trade. It wasn't a great trade. So it's okay to miss these opportunities from time to time. But change the color of your zone. By color coding your zones, you're going to stop yourself from getting into shit trades, basically. And had you held on to one of these lower levels, it's okay not to be trading all the time. You might get a reversal from here. What I would do personally is I'd wait for a really clear. So let's say you get this push down, push up. Okay, that's now a perfectly valid sell. Maybe just wait for a second. Maybe just wait for a second test, and then take that trade, which is now much higher probability because we've had a second break of structure. We've had one break of structure there, and we've had another break of structure there. So we've had now a second break of structure. That's now much higher probability than the previous trade. So, you know, use these tricks to your advantage, color code the zones that you don't really want to be focusing on, and instead wait for buy setups to occur. I've got an alert set here, as you can see, because if we trade back into this area here, now we've broken this structure. This is a zone that I'm more than happy to trade from, because we're in line with the higher time frame bias. Equally, if we were to get down to here, I'd be more than happy to trade from here, because again, we're in line with the higher time frame bias, which is buys. So don't be trying to catch reversals all the time. It's gonna whack you more often than not. If you do want the reversals, just be aware they don't come across all the time. And when they do, in these zones, that's where you want to be looking for them. Keeping the high time frame on your side is definitely the way forward in your trading. So thank you for tuning in. I hope you enjoyed the video. Please do remember to like and subscribe. It helps me out massively with the channel. It takes you no time at all. If you have learned something today, or even if you just enjoyed the video, please do me a favor, like, subscribe, and pop that notification bell, and I'll be sure to provide some more content as soon as I can.